Imagine the stock market is like a big store that's normally open from around 9:30 a.m. to 4 p.m. New York time. That's when most people do their buying and selling of stocks. But just like how some stores open early for certain people, the stock market has something called pre-market hours. Pre-market hours are kind of like a sneak peek, where people can start trading stocks before the regular hours begin. This usually happens from around 4 a.m. to 9:30 a.m. Not as many people are buying and selling during this time, so the prices can be more unpredictable. Kind of like if you were the first one shopping at a store and didn't know if prices might go up or down when the store fully opens. Some traders use this time to react to news that might have happened overnight, like big announcements from companies or government reports. But since fewer people are trading, it's riskier. The prices you see in pre-market don't always match what will happen when the regular market opens. In simple terms, it's an early window for stock trading that can help you get ahead. But it's a bit of a gamble because it's less busy and more unpredictable.